Crypto falling deeper into a bear market and Bitcoin the lowest it's been in 2 years. But in this video, I'm going to break down the bright side. There's a silver lining to this, and I really mean it from a data perspective. We're going to look at a piece of data regards to Bitcoin, and it's a silver lining, I think, for this bear market. So here's Bitcoin. This is on the weekly chart. This is Bitcoin kind of just trending down below this macro 786. It's a Fibonacci macro cycle 786 line that we've been tracking. And here is November 2020. Two years ago, Bitcoin trading at this price, entering the bull market. What's funny is I just did a video last night discussing that time period. I showed a very quick clip of me just doing an intro to a video when this was happening, Bitcoin breaking the bull market doors. It's amazing to see how far we've come in terms of cycles, cycle shifts. We were entering a bull market 2 years ago, and right now we are forming bear market bottom range structure 2 years later. What I want to point out right now is this, before we really dig into the silver lining. If we look at the RSI, and I think this is probably the most notable thing for me, as Bitcoin finds its bottom, crypto finds its bottom, is this. I did show the clip last night. We were very excited when Bitcoin was breaking the bull market doors. This was a great thing for crypto, great thing for altcoins. But look at the RSI in that range. RSI overbought, and actually already putting in its all-time high RSI indicator. And then from there, we were going to see just lower highs, right? So though Bitcoin was getting ready to put in an all-time high here in November 2021, this RSI, this momentum oscillator, the slower moving momentum oscillator, an extremely reliable indicator over the cycles of Bitcoin, was going parabolic. And right, so from a greed perspective, that is an alarm going off. But here we are at the same price as 2 years ago when we're entering the bull market, but we've retraced in an entire bear market. And we've talked about data that suggests we're finally in bottom range, and it could be volatile, it could be ugly, but we're in bottom range in an environment now where the RSI isn't overbought. Bitcoin's not overvalued, and we're going to talk about that in a second, but it's oversold. Bitcoin's undervalued when we're looking at all of the data and bringing it all together. And then also from this indicator perspective, the RSI, Bitcoin is at an area that we've seen it in previous bear market lows, right? So here's 2015 all the way back here on the chart. Here's 2018, and here we are right now, 2020, finding that bear market formation. So it kind of is the perfect storm for bears right now, though, as I record this video, as we're just living through day by day the grueling aspect of not just crypto, but just all of the other just mess that's in financial markets, mortgages and interest rates and real estate. So it's a perfect storm for the bears. We have headlines all over the place. You know, Bitcoin falls as another leader wobbles, kind of piggybacking off of FTX news. Coinbase shares tumble as Bitcoin slide continues. Investors fear contagion from FTX collapse. So all confluent with what's going on in traditional markets. Goldman Sachs says the bear market is not over for global stocks and predicts the bottom. So all of this coming together, it's a perfect storm for bears right now. As I record this video, November 21st, 2022. But check this out, everybody. There's a silver lining, I think, and it's just another piece of data that we're going to grab and infuse into the charts as we break down Bitcoin and crypto in general. More than 50% of Bitcoin addresses are now in a loss. You might be like, how is that a silver lining? Well, read the next part. Previous bear markets ended with the majority of addresses being out of the money. On-chain data shows most addresses holding Bitcoin, the largest cryptocurrency, are now in the red. The first time that's happened since the start of the coronavirus-induced crash of March 2020. So last time we saw this happen, that huge capitulation, March 2020. Before that, check this out. Into the Block defines out-of-the-money addresses as those that acquired coins at an average price higher than Bitcoin's going market rate of $16,067. So more than 50% of Bitcoin addresses. Previous bear markets ended with the majority of addresses being out of the money. So check this chart out and you can just see, here we are right now, Bitcoin addresses out of the money. Here's the 2020. Here is the January 2019 bear market low. Here, back here, is that 2015 to 2016 bear market to bull market shift. The percentage of out of the money addresses stood at 55% in January 2019, 62% during the depths of 2015. Now, I want to point out this. I highlighted this on the article. Past data, however, is no guarantee of future results, and the fallout from the collapse of crypto exchange FTX may bring more pain to the market. I would take that a little bit further and maybe shift the focus of that. It's not really FTX that has me most concerned. It's been rough. What has me most concerned is the macroeconomic landscape that we're living within outside of crypto right now is different than 2018 bear market low. It's different than 2015 bear market low. So we have to take that into consideration when we're trying to identify, and this is what I'm doing, this is how I'm seeing things, trying to identify my own risk tolerance. I'm taking into consideration S&P 500. We look back on the charts. Is this over? Are we out of the woods with S&P 500? Was that it? Was that the low? If it was, then Bitcoin might very well be getting ready to exit its bottom range for the bear market. However, I don't think it is. I don't think we're out of the woods just yet. I think this is a very strong likelihood of being a lower high on S&P 500, reflective of traditional markets, and we could go lower. What I want to note here on this chart is here's 2018, right? So you can very much see this bottoming out in 2018, December, and then you go to a Bitcoin chart, and this is kind of what we're waiting for. It's just that correlation aspect of these charts. Here's Bitcoin, and here's Bitcoin back in 2018 bear market bottom. So you see S&P 500 bottomed out and started moving up, and then you see Bitcoin started exiting slowly the bear market in 2018. Now, what I want to just point out is in that bottom range, we were there for 133 days. Right now, Bitcoin has fallen into the bottom range, meaning below the 786 line that we've been tracking on this YouTube channel, right around 17,000. We just fell. We haven't even been below the 786 line for a month. So last bear market, Bitcoin trading below that area for around 133 days. That can just be indicative that there could be months of pain ahead. And I think that's an okay thing, because if you look at this chart, Bitcoin would be in a very commonplace area if it actually did continue to fall and even fell all the way down to $11,000, $12,000. $12,000 area is actually a target out of this triangle. So we have room to the downside, and then just this 35% fall below the 786 line as a whole is kind of the average of the last two bear markets, right around the average. So right now, I would say the biggest silver lining is that, yeah, we do see a majority of Bitcoin addresses in the red. The silver lining to that is with all this other data, whether it's on-chain data or just the technical analysis data that we're tracking in regards to things like the 786, or we just looked at the momentum oscillators on the RSI showing Bitcoin being undervalued. All of these things, the silver lining coming together to say to us, Bitcoin's repeating itself. And though kind of the macroeconomic picture is looking pretty bleak right now, Bitcoin has room to the downside, but Bitcoin's also putting indicators in that say we're getting close and we're in that bottom range. So all of these data points coming together over and over again. If we dig into Bitcoin right now, this is what I'd be watching. For me, I'm in this first layer of the bottom range, right? We haven't fallen into this red. I'm very, very interested to see if Bitcoin falls below into that area and when. I'm going to cover that right when it happens. This is more important for me in terms of altcoins. Remember, Bitcoin not so much important to me, but the Bitcoin chart important to me, acting as an amazing cycle roadmap for me and my altcoin plays. That's why I track it so much. If we're looking at Bitcoin on the 6-hour chart, here's what I'd be anticipating in the short term. We are falling, Bitcoin's falling. We've broken this lower trend line of a shorter term triangle that we've identified. I'd be anticipating a move back to the apex area, maybe these trend lines. Maybe Bitcoin kind of tries to get back up there, get some separation from 16,000 and tries to break out. But what resistance is there in that $16,000 to $16,300 range in the very short term? You know, we see the breakout to the downside, a pullback. Is there resistance there for continued downside? That's what I'd be watching on the short term. There is a breakout target to around $17,000 to $18,000, closer to 18,000. That's interesting because if we go to the daily chart, what is up there in that vicinity? We have the 20-day moving average right at around $18,000. So we could get a move back above the 786, but see resistance at the 20-day moving average, the 50-day moving average just above. And we see this time and time again, Bitcoin getting separation below those moving averages, pulling back into it, and then resistance for more downside. We're in a bear market. And I say time and time again, I anticipate bear market things. I'm not going to sit here and lay out the case for all these massive breakouts and Bitcoin rallies, I want to see Bitcoin break resistance. Here it is on the daily chart. Here it is on the 6-hour chart. And that's what I'm going to be watching in the short term. But what I do know is when we're seeing headlines like this, more than 50% of Bitcoin addresses are now in a loss. It sounds terrible. And it is terrible. It's a bummer, right? Bear markets are not fun, but I see that. And then it's just another piece of data I bring into the charts and everything else we've been tracking for months, for years. And I say, okay, it's all consistent. It's all lining up. Maybe more pain ahead, but it's really helping me as a roadmap prepare for Bitcoin exiting the bear market, because I think that time is coming. This weekly chart shows, in my view, that we are in the bottom range and we're getting close. And that could be months away, but look at what we've just been through. Look at what we've just been through, everybody. So this is what I'm watching in terms of everything coming together. The news of today, we're going to continue tracking markets. Hang in there, everybody. Hope you're doing well out there. Hit the subscribe if you're not a subscriber. I will see you in the next video. God bless.